Good morning, everybody. It's Thursday, May 13th. It's about 8:40 in the morning. Just want to run over the gold and SP500 charts. What we're looking at here is the Kiko overlay chart, and you can see we had prices move up in the past couple of days and reach this level here. And yesterday it acted as a support level. Once the price broke above it, it traded through it and then broke above it. And right now we have just tested down, and gold is kind of bouncing off it now. So it's still finding it as a support level, very short-term support level. On the daily chart, I think we are going to see some type of pullback, probably down to the uh, 1120 area or 1110, or sorry, 1220 here or 1210 area, and then we might get a move up. I don't know if that's going to happen today or not, but on the daily chart, I think over the next few days we're going to see some type of quick pullback, and I'll show you on the daily and hourly chart what I'm looking at there. So here's the daily chart of gold. You can see it's had this nice run, and it looks as though it's starting to go parabolic here, going kind of curving and going straight up. Pretty much anytime we get a huge surge like this, you usually get it puts the index or the commodity or investment vehicle, when it moves that much out of its normal trading range, you usually get some type of pullback, which we saw over here. And from that point, it's these pullbacks, even like a run up like this, you'll get a quick pullback and then buying into it. So what we're looking at is we got this big run up here, and now we're looking for it. We could see gold just trade sideways above the breakout level of the 2009, so it might just trade sideways here, and we might end up getting in on a flag that flags out for a couple days on light volume, and add to a position, put a tight stop in. But we might get a quick spike down to the 1220, 1210 area, which will put us through. Let me just clear this noise off here. That'll put us down into the middle, the heart of this noise here. So we might get a pull down possibly to the top, 1220, or we might get a deeper pullback to this level. And if we get a quick sell down there, we'll probably look to take a quick long position and hope everybody steps back in and gold continues its trend up. So we're looking for some sideways drift down. 1220, 1210 would be nice. We'll have to see what happens. Depending what the volume's doing, we may see if we can take a small position at 1220. We can add more if it hits 1210, and then we'll look at the hourly charts for a protective stop to put in place in case it does break down further from there. But right now, I think the market's gold is a little overbought, and I think it's going to take a little bit of a pause here, a breather. So if we jump to the hourly chart, we can see this is the recent run in gold. It's a 1 month. We've got the breakout. The breakout came right over here. It really rallied right up into that level. Now we're starting to get some toppy chopping action. Same as what you see here. You get a surge and then you get this kind of chop, and then you'll get a quick sell off down to a key support level. And that's kind of what we're looking for now, is we're starting to get some chop here. We're hoping it's going to pull back somewhere into this level. Possibly it's a little more bullish now, so we might only get a pullback to the top, or possibly just to this little area here, the 1220. So if we do get a quick sell down, we may look to take a long position and get into to gold that way. So that's what I'm looking for gold. As for the SP500, here we have the daily chart. This yellow line here is the 50-day moving average, and what we're looking at is in January we had the sell down, and then we had this kind of relief rally. It kind of just drifted back up. We had all these 8-day moving averages, 5-day moving averages trending down, meaning the daily chart is in a downtrend, so we're looking to short any bounces into a resistance level. And there was a resistance level through here. There's a 50-day moving average not far above it, and eventually we had this nice pop into this level here, and it had a nice looking setup as we had cycles pointing down at that time, and we had a really sharp follow through. And only 2 days later there was a buy signal to go long, and That's kind of what we're looking at over here. If you ask me, all the moving averages are trending down. We're trading at the 50-day moving average. We're trading, there's a little side kind of a angle here. More or less there's like a wedge, and we're trading right above that wedge. And then of course once it broke that wedge, it kind of bounced off it. So this isn't a key resistance level, but it's a pivot point. It's where prices either are above it or below it. It kind of just swings off it. So right now we're just coming up and about to kiss that level. And I think there's a good opportunity that we're going to see the indexes finally drop off here. So I'll just show you the hourly chart, a little close up of it. Here we have this is the 2-hour chart. Every candle's 2 hours, but more or less we've got this ascending wedge here, and eventually prices broke out, and then we had these bounces off this point. So pretty much we're trading right at this key pivot point. And I call it pivot point again just because prices are stuck below it and then they're stuck above it. And whenever it hits it, it pivots and changes directions. Now it's a bit different. I'm not sure what other people call it, but I call it a pivot point. And for me, key resistance would be right through all this noise, right where the most amount of shares are traded on average. So you have the lows and the highs. The average share price is through the middle. This would be key resistance right here. But because this, and I'm calling this one a pivot point just because again once it hits that point, it pivots around it. But key resistance is usually through the noise, and you find the average price, and that's pretty much where the key resistance level is, where you're going to see prices stall out for sure, or at least trade sideways or pause before continuing in the direction. So right now we're just at a pivot point. We pretty much we saw. I remember I pointed out to everybody we had some kind of get ready spikes in the SP500, saying there's distribution coming on. Every time it would drift up, we'd get clobbered by some big selling, and I call these get ready spikes because eventually the selling is going to take over and we're going to see lower prices, and that's what we saw here. And of course that whole market crash thing was a little intense and a little extreme, but we had the breakdown, and now we've got the rally up, and I think we're at a pretty good level here for a nice swing trade to go short. And you can see we had big selling, but now we've got volume is dying. Volume is dropping as the price is going up, and it's right into a pivot point. So we've got a good opportunity, I think, to go short, and we could see. I would think the targets for this, if we go short this morning. Let me just change the color here. I would think the target would be pretty much at a key support level on this time frame, which would be right about here, and another key level would be around the 1125, give or take a couple points. So I'm just going to look at the charts here. We might take a swing trade short. We'd probably want to take some money off the table here and move our stop to break even, and we're instantly protected. We'll take another third off if we reach this 1125. And then once we hit this 1125, we'll move our stop to this support level, just a little bit above it most likely, in case prices bounce back up and then continue lower. And we'll ride the last third down and see if it goes any farther. So that's what I'm looking at right now. And I'll talk to you guys in the chat room. Bye-bye.